what's up, Stock Talk family? Thank you so much for clicking on. We are so excited you are here today. You are back with Stock Talk with Dr. E and David. Today we're going to talk about low risk ways that you can invest your money in the stock market. So you are in the right place if you're trying to find the best ways and strategies to grow your money.
So today we're going to be breaking down two of the most popular tools for long-term investors, which is ETFs and index funds. So let's get straight to the point, keep it simple, and keep it smart.
Exactly. I cannot wait. So please go ahead and grab your stock journal. If you don't have one, we have one ready available online for you. Just go ahead and click the link below and you can order your stock journal from us. And then hit that like and subscribe button.
And let's go.
Yes, that's all right, you guys. We're gonna go ahead and go to the first section. What is an ETF? ETF stands for Exchange Traded Fund. It is a collection of investments like stocks or bonds bundled together. You can buy or sell an ETF like a stock on the stock market. For example, you have the SPY, which is the ETF. It is the S&P 500 or the QQQ, which tracks the NASDAQ 100. The benefits, it has a lot of diversification, low fees, and flexibility.
What's next is index funds. So an index fund is a mutual fund or ETF that follows a specific market index. It tracks indicators like the S&P 500, the Dow Jones, or the NASDAQ. Then passively managed, which means lower fees. It's typically bought through investment firms like Vanguard, Fidelity, etc.
Yes. So here are some features of the ETF versus the index fund. So what does the ETF trade like versus the index fund? The ETF trades like a stock during the stock market hours. The ETF is a mutual fund, which is in the day price. For minimum investment, it's often none. And then for minimum investment, it may have a minimum based on the index fund. For fees are low for ETFs, and then they're also low for index funds. For tax efficiency, usually more efficient. And then for index funds, may trigger capital gains. For flexibility is high and can trade anytime. And then also less for index funds, less means buy or sell once per day.
So next, we have why should we consider ETFs or index funds? These are great for long-term growth. For long-term growth and investing, you put your money in there, and this is for 5-10 years down the road. It's not nothing you want to immediately get a return on. This is not what you get into these things for. You get into these things for to set it and forget it, like we keep saying. Put it there, watch it grow, keep an eye on it, make sure it's not falling off too much. But remember, what goes down must come up. So you don't want to get too caught up in that. You just let it grow. Next is lower fees than active managed funds. So like Dr. E was saying yesterday, is going to be fees that anything you get into when you get on these platforms, you get to trading. So when you get into ETFs and index funds, there are lower fees involved, so you don't have to worry about that part. Plus, it's perfect for retirement accounts, 401ks, Roth RAs, those type of things. And you can get started investing with small amounts. So you don't need a lot of money to get into these funds. You just need a little bit, add a little bit, and let it compound and let it grow.
Yes, most definitely. So for section number 5, our top picks to start with when it comes to ETFs and mutual funds, VOO, which is Vanguard, the S&P 500 ETF, VTI, which is Total Stock Market ETF, QQQ, which is the NASDAQ 100 ETF, and then the FXAIX, Fidelity 500 Index Fund. My absolute favorites is definitely the top 3. When I had 401ks and things like that, with my jobs, I definitely had VTI that grew my account exponentially.
And just a quick tip: when you see the Vanguard, the VTI, and the VOO, Vanguard owns everything. Vanguard and BlackRock, so you always want to stay invested into those type of ETFs and companies that own everything.
Exactly.
Charles Schwab would be another one on this page.
All right, so next, how to buy ETFs or index funds. So you can actually utilize apps like Robinhood, Fidelity, Vanguard, Charles Schwab. Choose any amount, and then when you invest, you buy and you hold, okay? Buy and hold. ETFs and index funds, mistakes to avoid. Making sure you're not trading too often. That definitely will lower the amount of money that you can get from those funds. Make sure that you are ignoring expensive ratios and then not understanding the index that you're in. That is not a good idea. Please know education is everything. Which fund are you in and why?
So tips to maximize your growth. Automatic monthly contributions. So if you get paid or whatever, you can have it set to where you got money coming out your paycheck that's going straight into your ETFs, funds that you're trading. Then you can reinvest your dividends. If you get into a company where you're getting dividends off of them, you can take the money that they're sending you back off your dividends, and then take it and invest in these ETFs and keep your money in the market growing. You can also stay invested during the ups funds that you're trading. Then you can
so even if the stock market went down some, don't you worry about it. Why? Because it just want to help dollar cost average what you have already done. So if you bought Apple for $200 one day and now it's 150, hey, now you get to buy Apple at 150, which is the deal. Absolutely.
Then understand what funds that you're tracking. Once again, understand the funds that you're in. Don't ever get into anything without the understanding of what and why you're getting into this.
Yes. Always check the expense ratio. That's always very important. And then don't chase returns. Focus on time in the market. Focus on time in the market. That is way more important. So think about that crock pot. Think about your roast beef or whatever you got inside there. For my vegans and vegetarians, whatever you have in there, whatever it is, the longer it's in there, the better it's going to taste. So definitely. And then if you don't have a journal, please make sure you get our stock journal. It will definitely help and assist you throughout your stock journey and your wealth journey, and help you really sincerely build wealth for the future and for future generations.
And when we talk about tracking your stock, this is a way to keep track of your stock and what you're doing on a daily basis.
Definitely. And then also, of course, join our amazing community where you get to build wealth together. Building wealth is already hard enough.
Yes, it is.
On your own. Definitely, if you have a community cheering you on along the way and ensuring that you're utilizing the correct strategies, please feel free to jump into our Patreon community. We'll be trading with authority. So what is next? David, want to go? What's next?
What's next is going to be the stock charts and indicators, intro into options made simple, and how to analyze a company.
Yes. Those are all my favorite things. All my favorite things out of our videos. Once we do start going over the actual stock market and what's actually going on within the market, we will have those three things inside of each video, because those are the number one things. You got to know what the chart is doing. You got to know what strategy you should use from the options plays, and then you have to know what's going on with the company. You got to know why. You don't just jump in. You got to have strategy. All right, you guys. Thank you so much for clicking on. We hope you learned a lot about ETFs and index funds today. Any comments that you would like to add into the comment section on the YouTube video, please feel free to do so. We would love to hear your input. We'll love to hear what you're invested in and how it has made you money.
And then tell us, like, from today, what do you like? Do you like the ETFs or index funds? What do you prefer?
Yeah, so we would put a survey out there. Who would win? Would the actual ETFs win, or would the index funds win? So for me, I am team ETF. I am. So we already got one vote over here. All right, you guys. Thank you so much for clicking on. We hope you learned a lot about ETFs and index funds today. Any comments that you would like to add into the comment section on the YouTube video, please feel free to do so. We would love to hear your input. We'll love to hear what you're invested in and how it has made you money.
And then tell us, like, from today, what do you like? Do you like the ETFs or index funds? What do you prefer?
Yeah, so we would put a survey out there. Who would win? Would the actual ETFs win, or would the index funds win? So for me, I am team ETF. I am. So we already got one vote over here. All right, you guys. Thank you so much for clicking on. We hope you learned a lot about ETFs and index funds today. Any comments that you would like to add into the comment section on the YouTube video, please feel free to do so. We would love to hear your input. We'll love to hear what you're invested in and how it has made you money.
And then tell us, like, from today, what do you like? Do you like the ETFs or index funds? What do you prefer?
Yeah, so we would put a survey out there. Who would win? Would the actual ETFs win, or would the index funds win? So for me, I am team ETF. I am. But until next time, we'll see you later.
All right, stay invested.
Bye. Hey you guys, we really hope you enjoyed that last episode.
And if you're really ready to keep transforming, go ahead and jump into that next lab episode. The one right here. Down here, the link right here.
It's probably over here.
Or there, or here. Link, click. Go ahead. You got it.